Have you ever stopped to think about what really moves the world's money? Well, today we're jumping headfirst into Forex, the absolutely massive $6 trillion a day market that, literally never sleeps. We're going to break down what it is, why having a strategy is completely non-negotiable, and how you might start to navigate this pretty complex world. So, let's get into it.
All right, here's our game plan. First up, we'll cover the absolute basics of Forex. Then, we're going to talk about the crucial line between smart trading and, well, just gambling. After that, we'll look at 4 really popular trading styles, and we'll wrap it all up with a big picture SWOT analysis to give you a really balanced view of the whole market.
Okay, let's start with a number that is, honestly, it's kind of hard to even wrap your head around. $6 trillion. That is a 6 followed by 12 zeros. But what does a number this huge actually mean for the Forex market?
Get this, that's how much money moves through the Forex market every single day. Yeah, you heard that right. To put that into perspective, it's more than the entire yearly economic output of most countries on Earth. This insane level of activity, this liquidity, is what makes Forex such a unique and powerful force in the global economy.
So, with all this cash flying around 24/7, what is actually happening? Let's peel back the curtain a little and really get to the core of what Forex trading is all about.
At its heart, it's pretty simple. Forex trading is just the act of exchanging one currency for another. Now, you're always trading in pairs, like the euro versus the US dollar you see here. So if you think the euro is about to get stronger compared to the dollar, you'd buy that EUR/USD pair. And if you're right, you make a profit. It's kind of like you're placing a bet on the economic health of one country against another.
So what really makes Forex different from, say, the stock market? Well, it's a few key things. First, it's decentralized. There's no central building or exchange. It's a global network. It runs 24 hours a day, 5 days a week, and as we just saw, it has incredibly high liquidity. That means you can pretty much always find someone to trade with, which is a huge deal.
Okay, with so much money moving so fast, it is really tempting to look at Forex and just see a giant global casino, but that view is super dangerous, which brings us to a really critical point.
So let's just ask the question straight up. When you trade on a market this big, are you just gambling? Are you just throwing your money down and hoping you get lucky? Professor Rahul Karat just nails it with this quote. Without a strategy, Forex trading becomes gambling. And that right there is everything. A clear, well-thought-out strategy is the only thing separating a professional, disciplined trader from someone who's just rolling the dice. So what does a real strategy even look like? Well, it's a concrete plan. It's a set of rules that you create for yourself that answers these 4 questions. When exactly do you enter a trade? Just as important, when do you get out? How much of your capital are you willing to risk on any single trade? And which specific currency pairs are you going to focus on? Answering these questions beforehand takes emotion and guesswork out of the equation. Okay, so we've established that a strategy isn't just important, it's essential. So now let's look at 4 popular ways people approach trading. And remember, the best strategy isn't some big secret. It's the one that actually fits your personality, your schedule, and what you're trying to achieve. This chart gives a fantastic side-by-side look. You've got scalping, which is for the true adrenaline junkies. You're in and out of trades in just minutes or even seconds. Then there's day trading, where you close out all your positions before the market closes for the day. Swing trading is for someone a bit more patient, holding trades for several days or weeks to catch bigger price moves. And finally, you have position trading, which is more like long-term investing, where you might hold a position for months or even years based on major economic trends. All right, now that you've got a feel for the different styles, let's zoom all the way out and look at the whole landscape. A SWOT analysis is a great tool for this. It gives us a balanced look at the strengths, weaknesses, opportunities, and threats in the Forex market. Let's start with the internal factors, things you deal with directly as a trader. On the plus side, you've got that amazing 24-hour access and high liquidity. The costs can be low, too. But the weaknesses are very real. Leverage, for example, is a total double-edged sword. It can amplify your wins, sure, but it can amplify your losses just as quickly. And maybe the biggest one, your own emotions can be your worst enemy when money is on the line. Now for the external stuff, the things happening out in the market itself. There's some incredible opportunities, like the rise of user-friendly online platforms and AI-powered trading tools. But there are definitely threats to watch out for. The market can be incredibly volatile. A single news event can send currencies swinging wildly.
And of course, you have to be careful about things like broker fraud and sudden regulatory changes.
So, what's the bottom line here? Look, Forex trading is not some get-rich-quick scheme. As Professor K.Rahual reminds us, it is a skill-based financial discipline that rewards preparation, patience, and professionalism. That is the mindset. It's about skill, not luck.
So, we've kind of laid out a map of the Forex world for you. The question now is, which path would you want to explore first? Are you the fast-paced scalper, the patient position trader, or something else entirely? The journey starts with that first step. Which one will you take?